On this episode of the show, I have with me Sandesh Patnam. He is managing partner at Premji Invest. We're going to be talking about different aspects when it comes to different types of VCs, and sometimes they come from more of a TAM focus, and sometimes they're driven by metrics. And we'll talk to Sandesh about that, a little bit more about how he evaluates the moat, talk a little about team and structure, and also that relationship with the founder. And that's really important. I think we'll dive into that as well. But Sandesh, thanks for taking the time.
Oh, glad to be here, and thanks for inviting me.
Absolutely. All right, before we start, Premji Invest, tell us a little bit about you guys.
Yeah, we are. We're unique in quite a few ways. Look, we are a captive fund to an endowment. That means we have one LP. The endowment was set up by a gentleman called Azim Premji. He's the founder and ex-chairman of Wipro. He decided many years ago to give away a bulk of his wealth to charity. A big foundation was set up in India focused on education. It has a very broad mandate to help kids from K through 12 through all kinds of help, mostly in schools, teacher training institutes to help the ecosystem and the foundation of learning in itself. These are schools in the most economically challenged regions of the world. So it goes to a great cause. There's a university system that sits on top of it, where we do curriculum design for these kind of schools. Also, people can graduate with various degrees, all of which is free, of course. And so the foundation is kind of a mission, gives us a really great mission orientation to things, right? But the endowment, our job as investors, we're not like a mission investor or a double impact investor. We want to grow the corpus of the size of the endowment as large as it possibly can be, so they can continue to do the good work that they're doing on the side of the foundation. So it's an evergreen fund, which means that we don't raise capital and there's no real time frame when we think about things. Not that we don't evaluate things on a time frame basis and we look at IRR and things like that, but given the flexibility of an evergreen capital, we can think about duration in ways that a lot of funds that raise capital with a given time period where they have to invest, and there is sort of a life cycle of the fund that they have to then think about distributions. We are not bound by the same thing. It's not that we don't care for liquidity. It just allows us a degree of flexibility that maybe some other firms may not have. So we are, we work across two corridors. We work in India, kind of think of it as a proxy for emerging market growth, and then US is kind of the ever-changing, technology shifts. And so one side is sort of the big, seismic shifts we see in all kinds of industries, including tech, life sciences, maybe something in consumer and financial services, and others more of a proxy for growth. A bulk of our practice is in mid-stage growth, I would say. So think of it as growth investors, but with a very venture mindset. We have an early stage practice that's relatively small, but think of it as Series A's and beyond. And we also have a public markets practice. And there's some unique things about our public markets practice, which is very much, long-term oriented. So think of it as not trading, but an ownership mindset. Our underwriting work in the public markets is very similar to the underwriting work we do in the private markets. And so we don't think of this as like a trade. We evaluate this document in and out of it, but we really think about moats and durability and type of management teams, everything we do on the private side. And our expectation is that we would hold this for a long period of time, as long as they're, generating the kind of returns that we expect them to do. And so that helps us in many ways. It helps us understand, even on the private side, what these companies that are promising to do these things at scale, what are the risks? How do they transition? How do they, navigate this journey? And then we are capital partners and thought partners along the entire journey, early growth, even life in the public markets. And so that gives us unique perspective, both in terms of how we can help our companies on the private side as well as in the early side as well.
Absolutely. I love it. I guess from that perspective, and I think that's great context for the episode. I mean, when you're looking at the type of investments, and you mentioned you're still trying to evaluate investments, you're still trying to do a lot of things every VC does. Maybe your your time horizon, some of those things might be different. I guess when it comes to actually looking at potential investments, how will you potentially, obviously given what you described, how will you look at investment different, or will you look at something differently than another VC?
Look, I think if your time horizon is I'm going to take it to the public markets and then I'm done, right? And maybe there's certain types of decisions you make as a result of it. But then if you're thinking, I'm not really thinking about public markets as like an exit event, but I'm thinking of just in the life of the company, it's sort of a milestone. And then you're expecting that, given that, public markets gives you, certain degrees of freedom, it further enhances the founder or the team's vision to capture what they're trying to accomplish. We will be there in that journey as well, right? So if you take that view, a lot of times, especially in growth, or maybe I'll answer this question slightly differently. People comment, look, early stage has a lot of this very product centric view, understanding the vision of the founder, really sort of, backing them with an idea and then seeing that idea grow. In growth specifically, you have, kind of two types of folks that are evaluating these things, right? One is really sort of focusing on the size of market. These are typically people with consulting backgrounds, TAM, SAM, that type of analysis. And then you have people from more banking backgrounds that are really looking at, what does the model imply? Is this going to be a beat and raise cadence? What are the KPIs? Is there good sales efficiency? Things of that nature. And what is lost is there really good product strength? Are there moats on the product? Is the vision and the capability of the team really capable of achieving the outcomes that they're underwriting to? And really getting a good feel for, has this management team or this or the founder thought through how are you going to scale this product? When do you announce, or when do you launch the second product? What does that need to look like? Is that a down market move? Is that an up market move? Is there some obvious adjacencies? And we start thinking about that and really resonating with the founder or the team's vision. You start thinking about all of these other things, TAM, SAM, all these are sort of more an after effect of some very core strategy. And I think when you think about the way we think about these things, we really focus on those elements, right? And so we've seen that in the public markets. And now going back to the SaaS era, right? You've seen that. Like if you think about even the early days of Salesforce, they started with the Sales Cloud first, and then it was the Marketing Cloud, then it was the Services Cloud, then it was, their platform. And so the ability to sort of navigate, call it multiple, waves or ride multiple waves nearly simultaneously to create a very large company is kind of the way we think about it. So when we evaluate these things, we're not thinking, is this, if actually during our diligence process, really, if we conclude that it's more likely it's an M&A event, right? So think about the build. If you're trying to build to get acquired, you're going to make certain trade-offs. That's not the type of company we eventually, end up investing in. Look, not all companies go public. A lot of companies get acquired. We're not going to stop them getting acquired. But at least going in, the thesis and the vision and the drive of the founders need to align with, hey, I'm going to create this really big, enduring franchise that can stand the test of time, IP or otherwise, right? And so if you take that lens, I think you start evaluating a lot of these opportunities slightly differently.
Absolutely. I guess when you're looking at, you guys have an established mission, a different lens, obviously, as you described it. When you are looking at founders and you're looking at what benefits, obviously, Premji Invest, and obviously what'll be in the best interest of the founders. I mean, when you have a different mission, obviously you might evaluate things differently. When you look at the relationship between Premji Invest and founders, how much of this mission? It could get lost in translation, obviously, because we're still talking about money investments. But how do you retain the spirit of it as you're doing these deals, as the company is onboarding each founder?
Look, I think we even call it partnerships for a reason, Amar. So we don't think of it as investments, and the reason we call it as partnerships, even on our website, we call it partners as opposed to investment companies, is that I think, look, our founder, Mr. Premji, is an entrepreneur at heart. He built this amazing business, and so we have a very entrepreneurial mindset. We understand it's actually a relatively lonely, journey. And we want to be a really good thought partner for our founders. And in fact, we say something like this, we say we want to be the port of call when the seas are turbulent. We want to be that first port of call when the seas are turbulent. And it's really important to build that trust. We're not really so focused on, quarterizing everything. Like if you think about the cadence of a growth company, in quarter one did something, quarter two did something else. It's okay if you're in the public markets and you have this strong public lens and you got to deliver within a quarter or 2 quarters. I understand that. But when you're in private, you have to make the right decision. And I'm not really focused on, what happened this quarter or what happened next quarter. Let's think of it as chunks of time. Think of it as catalysts. what is it going to take for us to go achieve that, and how we can support you during that journey, as opposed to saying, obviously everything has to happen within a given time frame, but if you start thinking about it in the terms of a quarterization of everything, the sales metrics, go-to-market metrics, revenue scaling metrics, then you tend to make these more shorter-term decisions. And some companies may be able to sort of navigate through that and still get the long arc right, but focus on the long arc and really, making sure that our founders feel like they have the support to take those types of decisions is sort of how we want to engage with them. And so, look, there's lots of great growth firms out there, and they obviously say a lot of great things, and obviously they're very helpful. And our calling card is really product centricity. So when things are happening and the founder or the team is feeling pressure along whatever dimension, and whether it's like, figuring out their moats, or if there's a competitive product, or if something that's happening downstream that is threatening their business from the perspective of somebody coming from sort of at the bottom, these are, very difficult things that a company needs to navigate. That's where I think we can add a lot of value. Mostly because, look, we understand that these are not easy things to do. And so we're hoping that relationship is strong and deep, and that we're true to, I know what we say we're going to do. In a lot of cases, we are willing to step in when things are really tough, right? So I think that's really, we can see all these things, but then companies going through a turbulent time, and that's kind of when we feel like, we should be that, thought partner, and maybe even a capital partner if the conditions are right.
I like that. Something I find very interesting, and I don't know if there's I think it's more art than science, but, every founding team does go through an evolution. We can call it product market fit. They're pivoting, they're trying to figure out what that right thing is, quote unquote. I think the relationship with, in this case, partnership, generally within the VC community, is making sure you are supporting that, obviously not letting them run into obstacles and try to think the grass is greener someplace else, but actually think through whether they're solving the right problem. I think that's such a difficult thing. And if you're an investor, you're watching that. Obviously, that's capital. You want to nurture, and you mentioned, you sometimes need time. Sometimes you do need time to think through some ideas and iterate through ideas. As someone that you set up these partnerships and you're making these investments, when you look at that, obviously you guys do want to return a positive return on your investment. How do you work with founders to make sure that they are supported as they're going through that product market fit, that discovery portion of their growth?
Look, I think maybe I'll take it in one direction. We can come back to this more specifically if I'm not answering your question on it. Look, there are probably many ways, one can realize great returns, right? And I kind of think of it as sort of movement within a matrix. So you can be in the consensus, which is everybody believes that this is something that can happen. And you invest in this business, or the founder believes that. As an investor, I'm thinking feels like this is a good team to go do this. It's in the consensus quadrant, right? And eventually you'll make market returns. If they execute well, you make market returns. But we're in the business of generating alpha, right? So what does that look like? In a lot of cases, it feels contrarian, okay? Now, eventually, when you're contrarian, you're also thinking, gosh, am I wrong, right? And that's a very lonely place. The most sort of strong, minded, visionary founders are somewhat contrarian. They have a view of the world or a belief of the world that's different from what consensus is telling you. And they want support to go make it happen. Now, I don't know if it's right or wrong, okay? But when I try to sort of work with founders, I'm trying to suss everything about it. So it's not just product market fit, it's founder product market fit, it's founder market fit. It is this sort of mission orientation to things that I'm going to change the world this way, and this is the right way to do it. And now to generate that extra alpha or return, to tie the two together, the consensus has to believe it at some level, right? So if you're contrarian and right, so what, right? It's like saying I did this right, and I threw this thing and I had the perfect shot and nobody saw it. So what, right? The whole world needs to sort of eventually get to consensus. And then you're right. And that's maximum alpha, because you got in at the time when it's contrarian, so maybe it's undervalued as a result. And to me, that journey of how you navigate from being contrarian to consensus and right is the path that we're supporting in a lot of cases. So what I'm trying to feel when I'm talking to founders is what is it that's driving them, right? And what is that motivating factors? What is it that, gets them up every morning, and how motivated are they? How are they going to go about it? How do they live? It's just not like metrics or like, I have an idea, I'm going to go do this. It's a lot more than that. And it feels like, gosh, it feels very fluffy in some ways. But I typically try to go find that, what is that inside a founder that's driving them? And if we believe that that is a vision that we can get behind, and we think the catalysts are there and I think they can be achieved, that's the journey we're really supporting in many ways. And so in that journey, as you can imagine, like as we discussed earlier, there's going to be lots of times where, the whole world's probably telling you you're wrong. It's kind of being a short seller, right? If you're in the public markets, you're a short seller. Management is telling you nothing's wrong. Sell side is telling you nothing's wrong. Stock keeps going up. But you have a view of the world that says, hey man, this is not right? And it's very lonely. And every day you're wrong, the size of your problem goes up, doesn't go down, right? In some ways, if you're short and the stock goes up, the short you put on is now bigger as a result. It's a very, very tough part to be as an investor. Same thing as a founder. You've got all of your life savings and your mission in one direction. The world's telling you, no, that's not the way it's going to go. This is the way it's going to go. That's a hard journey. And for us, I think that's exciting in some ways. So look, we're not always going to be right. But if we think it's the right vision, the right way to go about it, and building the right business, and the passion is there, that's the founder that we get most excited about, So that's the journey we want to support in many ways.
Absolutely. Yeah, and it's really interesting because, I think we hear a lot about founder success stories, and we see the finished product, we hear about the finished product, and we don't see sometimes or hear sometimes how the cake was baked. We just see the cake, and we hear about these famous, they become celebrity entrepreneurs, and everyone gravitates towards those mindsets. And I think, beneath that, there's a lot of different things that happen, and conviction and flexibility. There's a list, right? And sometimes I do wonder when we're, as an investor, you're watching somebody from the outside looking in, there's conviction from the founder. There's also conviction from the investor, because you could be like, all right, we believe these guys are making these decisions. We're on board because obviously they're trying to get further investment. But it's this conviction part of people making decisions, and then obviously one way, two way. But a lot of times, if you're a small startup, there's a lot of one way doors you're deciding, because going back is just too expensive. And I think like if I was sitting in the investor shoes, I'm like, watching that's got to be an interesting roller coaster of a ride.
Yeah. It's kind of funny, even as an investor, right? You go through this whole process. People are like, hey, we get, a lot of times we call it sort of, getting to feel your gut, right? You see a company, you come out of it saying, I'm excited, I want to do this investment. This is great, I love the person. People say it's such a linear decision. It never is, by the way. Because the second day you're like, well, I just thought about it for the last 24 hours. Here's all the ways it can go wrong. And there's 2 days where you're like, no way we're going to make this investment. It doesn't make any sense. And we do a call, we do more work, we do something else. And then we speak with the founder again, and they're like, oh, wow, I can see why they're getting there. Right now you're getting a little more positive. They're like, I'm not sure. You see this journey, it's churning. It goes positive, negative. It's sort of this sinusoidal wave. And eventually you get to a spot where, like, all things considered, this is a founder or a person we can completely back for these reasons. But you have gone through that churn cycle. And all the metrics and the storytelling is in support of a gut decision one's making at the end of the day. Because you don't know, because everything is in the unknowns. And the known knowns, unknown unknowns, how we want to call it. There's a lot of that. Like you said, one-way doors. That's the same thing, in many ways. You don't know, right? And so you have to believe in something else to continue to kind of support that journey. And that process will take time. In a lot of cases, when I'm pressured to make an investment, given 2 days, 3 days, and you got to run at it, I typically just say, look, it's just not for me. I'm probably going to make some errors, and I haven't really thought it through. I need to go through that cycle. And especially when things get sped up, I tend to want to just say, look, I'm just not in that game. We're going to just sort of step away. And that's hard to do. And look, we're evergreen capital. I can do that, right? I don't have a fund cycle per se, not like, I got to deploy this capital in 5 years. I got to deploy X amount of money in 3 years, so be it, And because we're also longer term, which is if I miss it here, I can do a later round. I can do a pre-IPO round. I can even buy it in the public markets. It's a relationship that I'm building. So I just don't feel at some points that I have to make a certain decision at a given point, because I feel like given the flexibility of capital that we come with, we can probably end up partnering with this founder at various times. And so speed, of decision making is somewhat negative in my business, in my mind.
Absolutely. I guess, I'm kind of curious. You mentioned something around being able to be patient. Obviously, you have a different model. When you are looking at investments and you are trying to make a determination, again, I think there's a lot more art than science. And there's some pattern matching. You have to buy into the founder, their ability to execute. And I know the power of love and VCs. You're going to get a lot more wrong than you're going to get it right. It seems like such a hard thing, especially now with AI, where there are a number of companies that are all very similar, right? And then obviously you have the potential for one of the large, foundational model players shifting something and changing the game. As an investor, when you kind of look at this day and age of AI, do you think differently right now? Are you still have to apply the same principles, or has anything changed?
It's made the job a lot harder, Amir. That's what I would say, right? So let's maybe I think you said something I think that's very important. I mean, as investors, the power law is very obvious. And so you have to ask yourself this question all the time. Why invest, 10 million or 20 million or 50 million in a company? The most I can lose is 50 million, right? If the company doesn't succeed. Say, all these things, all of the work we do tells us that, maybe it's at the 51% mark to make the investment. And we make the investment and it's hugely successful, right? And it's worth 500 million, the initial 50 million, I don't know, something like that, 10x. How are you thinking about this? The cap loss is 50. When you make an investment, it doesn't work. You miss something, the loss is much higher, actually. What is that loss? It's 450 million? Of walking away from it? Which is the bigger loss, right? Is it the loss of doing something that is wrong or missing on something that was going to be great? It's a very, very hard job. Now you come to AI, where the pace of change is so much faster, right? But all AI, you've got to sort of maybe, we've been sort of thinking about this quite a bit. And I think there's really sort of three markets, right? There is the data center market, all the picks and shovels and core data center built. And now whether you think about all the circular things that are happening with its NVIDIA's investment in all these things, and you're trying to see if there's real signal there, given all of the circular investments that are getting made. That's one end of the market. And everybody, when they say bubble, really are pointing there in my mind. And there's a second, which is really the foundation model companies. And the foundation model companies, obviously are chewing up a lot of capital, but the scaling laws still apply, at least up until now. And we'll have to see what the future holds. But so far, extra compute has resulted in some meaningful change. Now the change may be sort of beginning to plateau, but we're seeing some of the methods that people are using, kind of as a next step, perhaps, gives us the next sort of, scaling benefits, whether it's more compute or other things. And then there's really the application layer, right? So there's really three markets in my mind. And so when I think about sort of, how we make a decision, so in the data center side, we're thinking, look, I think if there is an alternative supply chain that needs to be stood up, because the supply chain is so concentrated today across, a few players, especially when you think about inference in the long run, there's probably a new ecosystem or a new supply chain that needs to be built. And so in support of that supply chain, there's probably some investments we can make. So that's one end. There's a second, which is really on the frontier model case. In the frontier model case, you have to be very, very careful. There's a whole bunch of companies that got funded that either, giving these sort of incremental tooling capabilities that make the LLM work in a certain context, but the foundation models are getting so much better that whatever incremental work you did to get the foundation model to work right probably is not as useful. Or even in the application layer, in this case, it's a sort of a relatively thin wrapper, and the thin wrapper gave you some initial, revenue traction, but the reality is that the thin wrapper has no moats, right? And the foundation model is slowly going to come up that, off that curve. And so therefore, those are tough ones to do. Then it goes back to truly applications, right? And in this case, you want to be vertical, you want to have a data moat, you want to have some network effect that usage and inference on your platform just enhances the value of the platform. And it has to be some notion of work versus workflow. And so I think in each of these sectors, we probably are thinking there are certain places, if you're thoughtful, that given where the roadmaps are, you can still make great investments. So even in the case of frontier model companies, it's pretty clear that the world's not going to have one model. And every great application company is saying, I'm going to use a mixture of experts. Some may be open source, some may be closed source, some may be my own models. Some maybe I want to run in high performance scenarios. Some I want to do in a low cost basis. And some I want to do for other reasons in kind of an orthogonal fashion as a checker model. And so this mixture of experts, kind of an analogy comes to mind. And then there are specific use cases where the traditional LLM actually is not a great fit. And there are other types of models, whether it's state space models or diffusion models and other techniques that need to be looked into so that those applications can be tied together. Now we have the application framework, right? So the different models working in tandem. And so we can put all these things together and put a data moat on a specific vertical and create some work. Now we can create sort of a more enduring, vertically oriented Gen AI company. And I think is how we've thought about trying to distill some sort of signal in sort of this very, very noisy AI era.
Yeah, I love that. It's interesting because this phase of technology innovation is different. I mean, they're all innovation, but it is interesting how we're seeing such big shifts. And it's almost as though if you were to put on your your crystal ball and go 3 years from now, could things be turned upside down because of some type of breakthrough innovation, some type of capability we haven't thought about? It might completely shift how we actually deliver these solutions, how we actually think about these solutions. I don't know if there's another time. I mean, when the cloud came out, when mobile came out, I mean, could we have said, in 2-3 years that could turn the market upside down? I don't know. I think this is one of those cases where, we're not going to talk about quantum because that's way out there. I mean, we're not even going to worry about that. But just with what we're seeing and how much money is going into innovating within the space and research, this is where I think sometimes now these research arms are becoming super important. That's a differentiation. But I do think it's interesting because I don't know if there's another time that I could recall.
I mean, it's just an amazing cost curve, right? If you think about what is primarily AI, it's cost of intelligence. And cost of intelligence dropping so dramatically. All of us know what I don't know, whatever you think about, the per cost token from, OpenAI was 3 years ago to today. I mean, it is 100th or more, right, in terms of how fast the cost curves have dropped. And so you go back to your point about a prior era. I mean, are we really early? Were we still in the Netscape moment of this era? Probably, right? And the big
I think so.
Were born much later. Like the Googles of the world came in probably 5, 6, 7 years after, right? And perhaps time shrinks this time around, and maybe 3, 4 years after. But I would sort of make the case that the best and biggest companies are yet to be built, and we just haven't seen it yet. And I think we're really at that early moment of the browser, really, at this point.
I'm with you. 100% agree. This I'm old enough to remember the Netscape moment, and I feel like everything that I've thought about with technology, first movers, I think first mover 1.0 is not always good. It's really what we've learned and we apply in the iteration of the next wave of that shift in technology that I think becomes a lot more powerful. And I think you're right. We don't even know what we don't know at this phase. But also, if we were to go back, if I were to put myself in a time machine, go back to Netscape, and then we had Netscape and we had some, graphical components, could we have thought that we would have seen the way applications would be delivered? They were just static websites. We were just going to get regular information. I think a lot of people who didn't go through that, who might be at a different generation, they don't realize that quantum leap of what happened, obviously, I think it'll be accelerated from what we're seeing now. But I think it's very similar to me personally.
Yeah, no, absolutely. I mean, we didn't forget, when the first iPhone came out, it didn't have broadband.
No.
It was 07, if I remember right, or something like that, at the big iPhone moment. And, we think about mobile as kind of a given. And it's only like...
It wasn't until 5G. So it wasn't until 3G kind of was, you could start doing stuff. Right. It wasn't until LTE, but really 5G in the last 4 or 5 years has just made it so that you don't need anything in your home if you wanted besides your mobile device. I mean, it's again... as you said, mobile device really was very limited. And you feel fast forward now, I mean, people use it to do everything. Some people just go laptop free. But We're gonna have to revisit this in 18 months, 2 years. We'll have to have you come back on, and we'll have to do a bit of a postmortem and see what you guys invested, what shifted. Sandesh, you've been fantastic. I appreciate the time. If somebody does want to reach out, learn more, connect with you, pick your brain, is there a good way to do that?
Yeah, look, prior to our website or LinkedIn, you can always reach out through both those mediums, and hopefully we'll get back to you soon.
Okay. Appreciate your time. Thank you for being with us and sharing.
Thanks, Amir. Appreciate it. Thanks for having me.
Absolutely. All right. That's it for this episode. Be back again. Different guest, different topic. Until then, two things. One, I think the conversation with Sandesh was fantastic. He talked to us a little bit about how Premji Invest approaches the market differently, has different drivers, and obviously their way of operating is a little bit different, how their relationship is with the founder. Talked a little bit about investing in AI, and obviously there's a lot of moving parts, and maybe we are in that Netscape phase. But this is a great episode. If you could share with others who might also be interested in hearing more about it, that would be something I'd love. Also, like, subscribe, comment, let me know how the show's going for you. Until next time, thank you and goodbye.